All right, what's going on, Investor Central Academy? This is Eric here. What I want to do for you guys today is help those that are just starting out get an idea of what SPY looks like when it comes down to, your basic chart and what you should have drawn so far. Okay, so with that being said, let's just jump right into it. The very first thing that you should understand in your charts, whether you're in TradingView or whether you're in Thinkorswim, is we want to start with a bigger time frame. Now you have your choices down here. You can plot everything. You can say the last 5 years, 1 year, etc., or the year to date. So from January, if I were to click on something, let's say, for example, the 6 months right now, what you'll notice is it's going to give me the last 6 months on the bottom. And then up here, it's going to give me the best time frame that allows me to see all this. So here, it's actually breaking it down into every 2 hours. Now, for newer students, and if you're just starting out, I wouldn't suggest going too far down into these smaller time frames just yet. I always want you to start top down. So what that means is start with your weekly and daily. If you want to, you can do monthly. Monthly does compress the information a little bit too much in some cases, but it's a good overall idea of what's going on. So let's go ahead and start right there. Our monthly, what we can do to start out is we can go ahead and just grab a basic trend line, right? Basic trend line. And what you're going to do is you're going to do your best to contain all of the information that exists here. So what you'll see here is that we've got 1, 2, 3, and it contains all the information below that. All right. Then on the bottom half of it, we also want to make sure we contain the bottom portion of this. In this case, we're going to get all of our wicks within it to start, and then we're going to go ahead and get a little bit closer from there. Okay. Another thing as well is it's very easy to see on the monthly, do we have any sort of lines that coincide in terms of areas of not only where the bottoms of the wicks are, but also where the bodies may exist too. And in that situation, what it does is it gives us an idea of where some very significant resistance levels may exist. So with that being said, we're just going to go ahead. This first area we can just estimate, and we can readjust these as we get a little bit closer. Okay, 1, 2, and 3 are around where I would put these. Okay, then just for your own reference too, it never hurts. What I would do here is go ahead, and if you want to be precise, you can grab the magnet up here and you can click it. And what you would probably want to do is put a red line for the very top. Why a red line? Well, once you get to the top, these are prices that people are most likely selling at. So a big red line showing that that's actually resistance right above us. Now, on the other hand, it doesn't hurt for us to go ahead and click in and get this bottom part of the line too. This is the most recent low in terms of your local lows, right? Because if we were to say absolute lows, meaning of all time, there's going to be lows in the back here. However, for what's applicable right now, we do have a couple of additional lines that we probably want to be aware of. If you actually notice this coincides with, let's go ahead here. This coincides with the body here, the bottom of this one here, and the bottom of this one here. So there's multiple points that give us confluence or give us agreement that this is a resistance level that was respected. Now let's also add in too, if we look a little bit further down here, there are additional levels. So for example, I would want this one, and I very likely would want to consider possibly the body of this one as well, because there's some significant resistance here too, which could lead us into our next possible range, okay? Also really interesting too to consider, just because I want you to bring your eyes to it here. Very close to 350, very close to 340. And what we did talk about before was that our nice round numbers tend to act as, resistance levels, simply because psychologically we like to aim for them. All right, now that I've got the basics here lined up, I also really quick, let's go ahead and give our very basic upward trend line up until it broke, right? Probably want this one right here. So right around there. Okay. Once that broke with this red candle, it retested and came back down, but that resistance line or that trend line did exist up to a certain point. Okay. Same with this one, the upper bound and the top. All right. Okay, let's go a little bit closer now. Let's go into our weekly. What that does is it takes each one of those monthly candles, breaks it down into 4. And what we would like to do here is all we're going to do, that's not what I want. All we want to do is we want to readjust these lines so that they now respect the additional information that we have here. So you may notice that my lines are just a little bit off here, but we're just going to take this, we're going to readjust it so it allows all of these points to stay within it. Okay, that green one's still poking out just a tiny little bit. Perfect, there we go. Okay, so you always want to start from the left as well. So 0.1, 0.2, connect those two and see if the third one does respect it. All right, if the third one does go up higher, then what you end up doing is you connect the first and the third. The second one just ends up a little bit lower. So it's really just about the geometry of things, the straight lines connecting things as well. All right, what I do like to point out here is that you can almost notice that you got your top area, then you end up having a shelf down below, and you have another shelf down below, which you break back about halfway into the top one, and then now we're headed further down. So what do we see? Well, we've got breakdown here, we've got a breakdown here, and we've got one starting here. If you were to compare it in terms of velocity, this one was decent. This one was very fast right here. And this one was extremely large and quick. The one that we're dealing with right now is kind of actually slow compared to our last one, but it is still gaining some momentum. And we are at this point approaching this group of buyers and sellers down here. So if these guys don't push back up hard, it's very possible we can break down below the previous low that we had. Let's see, was in terms of our drawn lines in here, was there anything that needs to be shifted? Maybe not. So what I'm noticing on this top one right here is it's actually more so of a range, you might imagine. Between these two white lines, there was a lot of buying and selling that got pushed around. And yeah, you did have a little higher end, but here you had these lows, and then you had it respected in terms of a lot of these additional lines up here. So I like that right here. You got to keep in mind the lines that we've drawn are not always going to be precise to the penny, because keep in mind some people might front run it. There's a lot of people we're all looking at the same type of graph, and so it depends on where people believe that they're going to have the least amount of risk. I like this one. Perfect, perfect, perfect. The open at this point right here. So there's a lot of points on this white line that I'm drawing down here that gives us that separation. Okay. So with that being said, key things to keep in mind as well. We had the push down from this line. We had a second push down from that line. And right now we're dealing with the third push down from that line. We are breaking into this next channel. Okay, so in terms of a basic chart, let's go a little bit closer in and let's look at our daily to see if there's any additional, movements of this. Maybe we could scoot this up just a tiny little bit by a few cents to coincide more so with the top of this range, the points that hit in here, the bottom of these guys, and also a few of these in here. So rearranging your resistance lines to make sure they're a little bit more precise, okay? Like for example, this is also a good one up here. You might imagine this resistance line where you rejected from it twice. But what I have drawn here is that there was this volume and people that are sitting right here as well. It failed to hold though, that's the thing. Every time it broke up, it broke back down. Every time it broke up, it broke back down. So it really shows that the bears are strong at this level right here. If this was to come back up to this 450 range at some point, you should be expecting there will be likely some sort of selling or a little bit of a bounce away from it before continuation. If there is, it's a retest of that supply level. Okay, with that being said, let's just really quickly in here, let's draw a couple of mini trend lines, because to teach you guys how this works, there are times where you may be drawing something. So for example, from up here and draw a trend line that extends, right? Or even in this situation, you had a very distinct quick drop down here, and you can see how the break at this point, it was broken up above. And if we go closer, there's very likely some form of retest where we came back and tested out that line one more time. So what we're going through right now, we've got this downtrend, and you can also say a little more steep this downtrend. Just watch out for when they do happen to potentially break. If they do break, then we're looking for that retest ahead in a different manner. Be aware, we've got this group of people down here that are likely here to push the price back up, because you had this little channel where you had this little W shape. Okay, and once we broke up, we broke out of it, retested, went higher, but now we're coming back to retest this level. So if this gives up, we're headed back into this channel. If we end up rejecting it, we could re-entertain some of these higher levels. But again, as of right now, we have some very distinct downward pressure. It's a bear market. We all know that there's been some solid rallies that have happened. And you got to keep in mind, these rallies are often situations where you're going to hear this narrative and a lot of people saying, oh, hey, we're out of the bear market, or we're gonna make new all-time highs, ATH, right? Go back above this previous high. But at this point, that's unlikely, because the way that the markets are poised is the markets are looking to take out liquidity. That's what the Fed's doing. So it's until this white line up here is broken and we retest, we're in a bear market, guys. That's just how these things work. I will point out there's a possibility with this right here. This could have been our preliminary supply in terms of, we'll talk about this in terms of Wyckoff distributions and accumulations, but there's a possibility we may have a lower, and this is going to be the preliminary supply up here. So this worked out for a moment for this accumulation, but right now I do believe we're headed down for a lower accumulation area where big money is going to try to gather a couple, some more of their stocks and resources. Okay, I don't really want to take too long today. Market's still open, but you guys do have today to get your charts set up together. If you do have additional questions, please don't hesitate, reach out, let me or Chemo know, and we're more than happy to get those things set up for you. All right. Last thing, up here, there's a snapshot, copy chart image or copy link to the chart. And all you got to do is click that. What it'll do is it'll copy it to your clipboard, and you can Command or Control V into the Discord directly, and it'll share it with everybody. All right, cool. Hope that was useful. I will talk with you guys very soon, and we'll continue with the class as they go. All right.